All right, we're live. Okay, we got some I guess it is working. Let me know how the volume is. We're going to do some price analysis, some internals to track where we are in the investment cycle, right? Not necessarily, the economic cycle. We'll take a look at that, but we're going to do some market timing. How do we time the market, right? How do I time the market? There's so many ways to do it. You can skin a chicken. How do they say it? You can skin a chicken 10 ways, right? So, first, we got the VIX up here because number one, the question here really is, where's investor confidence and when do they position, right? What is investor confidence? Right now, investors are very confident. How do we know that? Because the volatility index or the fear index is collapsed, right? There isn't a whole lot of fear in the market. We're at 15. Historically, the average is 20. So 15 tells us we're headed into a slow grinding bull market trend, right? Slow grinding bull market trend to the upside. And we should be looking for, buy the dips. I mean, you can go buy breakouts, but unless you're a day trader or you're very technically sound in and out, it's going to be tough, right? If you're position trading, this strategy works better for position trading. You're holding it for a couple months. If it runs up too quick, maybe you get rid of it, right? So we're at the bottom of the VIX, and put simply, when we throw everything, I'm going to throw this ticker on there. Let's go show. Okay, so we're going to look at the VIX first because we're really looking for the pullback, right? We talked about this before. When the VIX spikes in a bull market, only in a bull market, when the VIX spikes, I want to buy the dip, right? I want to buy the dip when the VIX spikes. We've been consolidating. Last time we consolidated at the 15 level, which is our next support, right? We're going to pop up. We're going to pop up because there's still more uncertainty in the market. There's still a lot of uncertainty, especially with the PPI report that is now weighing, is inflation back? Is it going to be sticky? Does the Fed cut? Right? They're not going to cut. There's a lot of uncertainty. Now, we can talk about that in a minute, but the point is, last time we had the VIX at 15, so very confident, very highly positioned investors, and then we had uncertainty start to rise. We had a spike in 2 days from 15 to 20. That was a buy the dip. I literally said before it broke, I said, hey, the VIX is going to spike. You want to buy the dip, right? We talked about that. How many days? 1, 2, 3, 4, 5. It spent 6 days. Right now we're on day 1, 2, 3, 4. We probably have, who knows? The VIX could spike on Monday. I thought it was going to spike today. Monday, Tuesday, we don't know. The point is, we're going to get that spike. You're better off waiting for the spike up to 20, near 20, before you start thinking about getting positioned, right? So you want to, now, does the VIX leak lower? Sure. But guess what? We just had a negative surprise in the market. Now we're talking about economics here, macroeconomic trends. We had a negative surprise and it still didn't take the VIX up. So this is a very strong bull market. The economics, the economic trends are very positive, as much as you might hear negatively in the market. The investors don't give a damn. They're piling in, but there's an other side to this trade where, fund managers might be, taking their positions off, or at least trading the market, selling into this, uncertainty. And that's what we're waiting for, that spike higher, right? We're going to look at internals, momentum, trend, all that. So SPY is just our, overall market breadth. Actually, matter of fact, let's go back here. Let's go back to this VIX and throw the S&P on here so we can kind of see. If you're not sure, we can see simply this is just S&P 500. When the VIX spiked, we started, April was our real threat to the market. Our overall bull market threat was in April. And that main threat was, hey, are we going to have a debt crisis? Basically, are interest rates going to surge? That was a question. Didn't happen. We're not there, right? We're not looking at interest rates surging. What we are looking at here is we're looking at a solid bull market because interest rates, we have a buyer. We have an unlimited buyer, by the way. If I might remind you, okay, the crypto market, the stable coin issuers, which are going to be banks, they're buying the US debt to create the damn stable coins. So we have an unlimited buyer for more fiscal. This is the strongest bull market setup I've ever seen. Okay, am I 50 years old? No. But hey, whatever. It's the strongest I've seen. This is a very strong market, right? You have a debt buyer, unlimited, because they're going to be, crypto's only going to go higher from here. So we're looking for spikes into resistance on the VIX to see if when fear fully fleshes out. When it fully plays out, that's when you want to buy the dip, right? So every time we had that dip, boom, we had the, the VIX spike here, dip buy, right? We had to spike again. Now, did it, you're looking for the dip buy. This doesn't mean buy the dip. This means look for a position, right? Every single time we have that pullback. So it matches up one for one. Last time we had this little dip, everybody got scared, boom, went higher. So we got that clear. Now, when it comes to the actual trend, let's go ahead and hit the S&P. Here's how I would look at it, SPY, right? And this is going to be less informal, right? This is not going to be formal for if you're looking for super formal live. We are live here. Let me see. What are they saying on CNBC? Oh, I guess I got shut off. PPI is our biggest threat right now, right? PPI inflation talk is back. I think it's muted. All it is are we going to get that cut or not? It's irrelevant. So the trend of the S&P is showing some bearish divergence. This is why I'm kind of warning, hey, we're probably going to get a pullback here. Like we just looked at the VIX. The VIX is going to jump to 20 in the next week or so, right? I know Tom Lee's bullish, and Tom Lee is saying, hey, we're gonna grind higher. He could be right, but when these signals strengthen like this, bearish divergence, you see we have a high July 31st, okay? And oops, and the price is climbing. We have a price climb here, right? Price is climbing from high to high, while the RSI, our momentum gauge, is falling. So momentum in the market is dipping for the S&P 500. All this represents is the overall index, the overall market. The buying pressure is not strengthening. Now, there is strength for individual names, right? Obviously, you have Open Door absolutely exploding. You have UNH exploding, right? These are asymmetric plays. So traders are taking advantage of this, right? Look at this Open Door exploding, right? And hey, that's a great trade, but we're not talking about, the risk reward is way better after the VIX spikes to 20, not before it spikes to 20. So you can chase this, but we're trying to lower our risk. And because Open Door could open down, a whole dollar just from one negative reaction from the Fed saying we decided not to, we're going to hold rates till next year. Open Door needs rate cuts, right? Open Door is trading off rate cuts. UNH is not. UNH is a stronger defensive business. It's more of a value play. I think this is really going to play out nicely. I want to see a pullback here. We're already long options. Go check out the Twitter. But the point is that these are two different businesses. Now we're getting a little more into fundamentals here, but you need to understand fundamentally, Open Door is a dying business that could revive with rate cuts. UNH doesn't need rate cuts. UNH is a strong business. Bunch of froth, a lot of people sold because of stupid interest in politics. It's irrelevant. This is a defensive growth company. It's still a growth company, but it's defensive. Why? Because you pay your insurance bills consistently. Who cares if they drop some revenue? The underlying business is strong. So if inflation does rise, right? I know we're cutting into fundamentals. If inflation does rise a little bit, guess who benefits? UNH, not Open Door. Interest rates higher. This is not a capital intensive business. Okay. Their cost of customer acquisition is the same. Nothing changes. So UNH is a great trade, right? Not Open Door. Open Door is very day tradey, right? This is all about volume and positioning. Back to the S&P. I hope that was clear. The S&P is showing bearish divergence. So the overall market, right, as far as, QQQ, we'll take a look. Bearish divergence. MACD is a little slower, so we're not too worried about MACD. Matter of fact, I want to see the stochastics. I see that comment on there. I'm going to go to the comment. Stochastics, I want to add that on there. This is the fastest momentum gauge. This thing really moves. So it tells me we haven't dumped yet, but keep your mind, keep your eye open for that VIX to really move off 15. That is that's going to be a quick buy the dip, right? So anyways, we've got stochastics here. All right, let's get back to this. So we're seeing bearish divergence. I'm warning, hey, watch out. What up, Aaron? Oh, yeah. I see you. Before I hit your comment, what was I going to look at? Oh, really quick on Twitter. We have some divergence on Twitter. Where's that Twitter feed at? I wanted to show this really quick before we get through. All right. So if you're familiar with Ryan Dietrich, CNBC contributor, right? Very smart guy. He's showing the long-term divergence of the RSI, the S&P 500. Let's see if we could zoom in on this. He's just pointing out, hey, we have bearish divergence. Price is moving higher and the RSI is moving lower. That's a setup, not for a bear market, but it's a setup for a sharp reset in positioning. And we're going to look at positioning. So he has the same thing here. He says S&P 500 making new highs, but potentially negative divergence under the surface. This is from what? Frank Caporelli this morning. Great. All right. Matter of fact, do we follow this guy? Let's follow Frank Caporelli. Thanks. Yeah, there we go. What's the CRM? Yeah, I know CRM's dipping. I actually like the buy here because CRM just got an upgrade. Not only that, it's a software. I think it's overdone. Could it slip lower? Sure, whatever. I'll place some more options on that. Let's get back to the content. All right. By the way, CRM, we'll look at CRM. We'll look at CRM. All right. So when we get this back on, when we get back to the S&P, Aaron Okinga says, as you know, markets can grind higher for longer periods of time with divergence. A divergence can also show a sign of future consolidation, but good to be cautious 100%. That's exactly what we're communicating here is, be aware of the VIX. That's the fastest signal, really. Be aware of the VIX spike. That means look for a dip buy. All I'm saying is I don't want to be too heavily positioned right now with this bearish divergence. I might be more tactical in and out, right? But I'm not going to be heavily positioned on something, right? Unless it's asymmetric, or I can't sleep at night with the VIX with this bearish divergence in a heavy position. I want to be lightly positioned. I want to be shaving. I want to be lightly positioned. So when it comes to the market, timing the market, you could go ahead and get in and out, but this is not the best time to be super long on a heavy, position. That's my take on it. I think UNH played out, right? UNH played out. Lululemon looks great. That's what I really want to dive into is Lululemon. What do we have at the bottom? Find support chart. All right. So S&P, where would be the support for S&P 500? If you're not interested in S&P, we're going to look at some individual stocks really quick. But if I were to look at this, here's what I'm going to do. I'm going to look first at our volume profile. I want to see over the last at least month or so, or the last couple dips, where's the volume at? Okay, where's the volume at? This is on TradingView. I'm going to look at not this dip. I'm going to go to the support right here. You can see we have support multiple times. So I'm going to hit this, boom. And I want to see where that, where our volume is at, where our volume shelf is, where it could come in. So it looks like you see this clump right here. We could be seeing 638. We could come down as far as 625, right? We could come all the way to 623. You just got to keep these levels in mind. So we're looking at 630s, the 630s. What are we at? 644, 630s. I would say mid 630s, and then a little bit here at 628. And then at the lowest, we come down to 620. That's a possibility. May not happen till we could grind higher also all the way through early September for 3 weeks. So we could grind higher and then just boom, slip back here, 635, right? So I want to look at that first. So there you go. You got the 630s. Now let's do anchored VWAP to see where our moving profile, our moving average could be, volume weighted average. I'm going to draw 3 of them. So we have a couple. Right? I'm going to do this dip. I'm going to do this dip. That's a little further. And then I'm going to do a close dip, which would be, let's do our most recent, right? So these are 3 potential spots. They're pretty much in the same spot as the volume profile. So how are we timing the market? We're waiting for the VIX to spike to see how drastic it is. Once once the VIX jumps to 20, okay, it can go above 20, but right, as soon as you gap under that 20, it's game time. It's game time. It's game time to go back to the S&P and say, oh, we're going to move higher. Now, individually, we're not going to move higher, but maybe we're here at 633. Okay, I'm long. Oh, 626. Okay, I'm long, right? Because the VIX ran to 20, got above whatever, trickled, and then fell back down because this is a very strong bull market rally. Okay. Now, what do we want to see next? Our momentum direction. We saw that. We can look at some individual names too, right? Wait for a positive surprise. Yeah, we're going to get a positive surprise in the data soon. Can you show us technicals on Bull and Kava and Lulu? Yeah, we can do that. Bull, Kava, Lulu. We will do that. And I think what I'll do is I'll end with the breadth and the positioning. Or we can go that. Actually, no, let's do that now. Let's do breadth and positioning now. What do you think? What do you think? Do we do breadth and conditioning now, or do you want to go straight to the technicals? I guess we're already in the flow, so we'll look at Lulu. I've been watching Lulu. Okay. So we'll take a look at Lulu. The VIX spikes. Lulu's so oversold. Let me take this off. It's already so oversold, right? That there's a lot of bullish divergence. I won't even look on the daily chart to really see this. I would go to the weekly chart, even the monthly. Let's start with the monthly, right? Let's go to the monthly. Look how bad this is getting. Okay. Can I say this on YouTube? I think I could say this on YouTube. I don't think I'll get not demonetized, but hit for saying this is getting killed, right? This is the language this thing is getting killed. This thing is getting killed on the monthly chart. It's almost at, fully reset momentum to zero, right? Zero momentum. The momentum is grinding lower. This isn't a downtrend, but it's at that point in the trend where it can pop higher. So I want to trade this with put options, right? I want to buy credit spreads, low risk, very low risk. I'm taking a small position. And I know some people want to know, we'll make those videos how to set this up in the future. I'm not there yet. Okay, I'm not there yet because we're doing different stuff on this channel. I think the opportunity to be positioned. Okay, let's not talk about that. I think the opportunity here is that you want to be long when the VIX spikes to 20. Let's keep it to that, right? Anyways, we're gonna come back up. We might even roll over. I need to get way quicker on these. I've seen people use these a lot better. We might come here and roll over. That's okay. If we're selling puts, we're going to be at 50% on those puts before it comes back down and possibly makes a new low. Okay, now if the market does recover and break out, that's going to take a while. We won't see this till probably January, right, where it really breaks out of the trend. So we're just playing it into the VIX spike, right? And then when this VIX comes back to 15, where we're at right now, you might want to get out a lot like UNH. Okay, UNH has came down. Now it's popping. Let's take this off. Now that UNH is starting to, and you had a reset on UNH all the way, so it's turning up. You want to be long, right? You want to be long on that. Let's go back to Lulu. Lulu's not there yet, so you're kind of being patient, but I think this is still a spot to start digging, if that makes sense. You want to start digging here, dig a little bit, because if it does pop, then you have a little bit of capital. You have a cushion. Then you collect your cushion. You wait for the the retracement to the support again. But I think Lulu's, well, CRM looks a little better, but I think Lulu has earnings pretty soon. Look at the bullish divergence on the weekly, right? This is bullish divergence. It's not class A, meaning it's not the highest, class S tier bullish divergence, because you have price coming down and then you have the RSI kind of sideways. So it's not the strongest bullish divergence, but it's still pretty strong. If you look a little, you take a couple steps backwards, you can see that the bullish divergence is still here going back to July. Look at that, right? Point A, point B. Point A, point B, moving higher. So I like Lululemon, right? There's no perfect model, but I think this is a bullish. I think we can run up at least. Let's go ahead and do a volume profile. Where can we run up to? Let's do two things. Okay. There we go. We're going to do anchored VWAP here from the super high and then from the previous high. Okay. So these are going to be price targets for me. These are going to be price targets. First price target, if it does pop, is about 236, right? That's from this high, this sell off. Second price target, 266. And then if it gets up to 300, I think I'm pretty much going to be out at least 75% of my position. I don't want to be all the way in, right? I don't want to get all the way out at 236 because we're in a strong bull market, right? We're in an uptrend. You don't want to fully get out on that. Okay. So we have three spots here when it comes to using volume weighted average. Now let's go to anchored volume from that last high, right? This tells us, about the same spot, 229. We can move up to 229, and then we might grind through this 270-ish, and then boom, 313. So it's the same thing, right? Same thing. You're just looking at it in a different sense. Bullish divergence, right? MACD is going to confirm that. Stochastics is going to move first. So I'm ready to collect. I want to be long Lululemon right now. I want to be long. Now, Lululemon, because it's recovering, it's already getting, destroyed. If the VIX spikes to 20, it might not even really make a new low. It might just come right back to 186. It might even move up because, investors are bullish. They're still piling in. All right, that's enough for Lululemon. Okay. Where's that breakout point? Probably about right here. All right, next Kava. All right, so Kava, this one's a little different. I haven't seen it. I haven't really looked at this one. How does Warren Buffett buying 5 million shares of UNH and it not explode? Tanner, how does Warren Buffett buy 5 million shares of UNH and it not explode? I mean, no, I think it is exploding. UNH, really quick, it is exploding, right? I mean, this thing moved up already 31%. This is a what, $200 billion market cap. So it moved about 60 billion. I want to say it moved about 60 billion market cap. I would say it's already moving up. But it's not a tech stock. So it's not going to just, yeah, this was a big move for UNH. You're probably not going to see that in the history of UNH anywhere. That's a strong move. 30% in how many days? In about 2 weeks. That's a big move for UNH. Yeah, that's a big move. It's coming into resistance, though. It's probably going to be forming a kind of if it doesn't get past this, then it's going to trickle around here, right? We don't know for sure if we look at the momentum. Okay, what did you say? You said, oh, you didn't say Aaron didn't say UNH. Well, we're kind of doing UNH here. I just wanted to point this out really quick. So yeah, UNH is already, on the rise. I think it's not something you want to chase right now. I don't think you want to chase UNH right now. If anything, I would throw on a bull spread, not a bull spread. I can't even think right now. I'd throw on an iron condor, right? From like 270 to like 375 and just let the premium leak out, because most of the juice is, not most of the juice isn't squeezed yet, but it's not a good risk reward to be long or to be short. This thing can squeeze fast or can just come down or just consolidate. So I want to collect premium on that. I also want to wait for the VIX to spike. Same thing. You said he bought maybe a month ago, right? Yeah, Tanner, I think he bought about a month ago. Who knows when he bought? He's probably thinking about buying for a while. But no, I would say UNH has made a strong move. Right. All right, let's go to Kava. Market timing. We're always thinking about that VIX. 2Q. Okay, he bought in Q2. So he's been buying UNH. All right, so Kava now. Let's go to the monthly chart, see what it looks like. This is a newer stock, not a whole lot of now the Kava restaurant is really good. It's not a whole lot of history here. Okay, so for Kava, here's what I would say. Let's see. I haven't really looked at this one. There's a little bit of support around here. Look at this. Okay. Let's take that off. Let's just look at here. Yeah, Kava looks like CRM. Looks a little bit like CRM. You got a couple zones here, 71, 54. The question about this business too, fundamentally, okay, we want the VIX to spike. If it does, where's the RSI? The RSI is going to be hitting that oversold position, right? What do we have here? Kava CEO Shulman discusses economic climate, noting consumer unease and outlining the company's efforts to stand out from negative views, fast casual dining. Now, when I think about Kava, I think it's a good setup. The only issue is, for me, we're heading into what, school season. So are people more likely, and I could be wrong about this. I'm not an expert on restaurants. I need to look into it. This is a consumer cyclical, right? Right now, here's what I'd say about this. This is where we can use the internals. If we go to our internals, right, we can see here that consumer, we're going to look at relative strength versus S&P. This is this is communications, right? So these are communications versus S&P relative strength. You can see a strong trend, right? So communication stocks, I'm tilted that way. Okay. Energy, hell no. Energy sucks. Might be a good buy though, because it does suck, but not really interested, right? Where does Kava fall between? It falls between XLE, or relative strength, in the consumer discretionary. So XLY. So what does XLY look like? It looks okay. It has been climbing. It looks good. If you get a rate cut, is that going to get people to buy more Kava? Sure. I just don't like it immediately, because I feel like, and I could be wrong about this, I feel like people are going to be buying more groceries than eating out, with this health trend. I could be completely wrong. I don't know. I really don't know, to be honest with you. I just don't initially get that, oh yeah, this is an easy, I'm long, right? I don't get that. Same thing for Lululemon. I'm not thinking, oh, this is an easy long right away. So I might give it a little more time when it comes to Kava. And those internals, here's where the internal strength is. It's in communications, very strong, and it's not industrials. What was it? Oh, Home builders. Home builders are also ripping higher. I think there's one more. Consumer staples, was it? Staples. Oh, healthcare, right here. This is UNH, right? This is probably UNH literally carrying it. So initially, you may not care about it, but I want to know the internals of the market to say, you know what? Kava is getting beneath this support. It probably makes its way down to 58, right? It's probably going to come down to 58. And so I don't want to enter that yet. I don't want to get into it yet. Also, the RS, I'm sorry, the MACD is rolling over too. So this is literally a good potential move if consumer spending comes back. I feel like Lululemon's a little stronger of a narrative because it's back to school, and that's going to be mostly what? Mostly female purchases, and they use the most credit cards by far. Where Kava necessarily, they might have more competition. Lululemon, I think they're going to rebound strongly because you're going back to school. Everybody wants to show off. It's still hot outside, right? I think it's a stronger narrative than Kava. So if I had to pick one, I'd go with Lululemon versus this. But this looks good. It's just in a downtrend. It's making a new low versus Lulu. Let's go to Lulu. Oh, bull. We got to do bull. Okay. So versus Lulu, I think it has a little more depth to it, right? It's already starting to curl up. And that RSI is picking up. So I think Lulu is further in the recovery cycle. I think Kava has a little more time. That's all I got to say about that. Bull. All right, so bull looks nice. What's driving bull? What is the market cap? Market cap is 7.7 billion. Okay. Who are we comparing to? Robinhood? Is it great? Bull might have a nice run. It might have a nice bull run, right? But this is good. This is a definitely a parabolic setup, right? You can see these parabolic setups. They grind shoulder. Now, some people are going to say this is a head and shoulders, but we're in a strong bull market. Look at the RSI picking up. This one looks even better. I like bull as a quick momentum trade after the VIX, though. I want to wait for the VIX. This is a highly speculative, interest rate play. It's a play on interest rates also. So once bull starts to close above 16, I might like it. Where's the most of the volume at? Let's go to the previous lows. Most of that volume is, it's near the volume gap. So yeah, I can make a run up to 17. I don't think it's ready yet. This looks a lot like RCAT, right? This is looks a lot like Red Cat Holdings. Did the same thing and then it got dumped. Very similar. You see that? High risk play. This is drone technology. Just not ready yet. So same thing. It looked like it was going to break out. Matter of fact, it had a small little breakout here, and then it just consolidated and got crushed. So I wouldn't be too anxious about bull yet. I think it's getting there. All right, I think it's getting there. What else we got? UNH. We got UNH on there too. I'm thinking if we get the drop to 58, we see a huge bounce. Yeah, for sure. Yeah, I know you're talking about Kava, right? Yeah, if you go to 58, that looks really good at 58. If you go to 58, then I like it. 58, I definitely like it. Consumer discretionary, because what we're going to start pricing in soon is going to be rate cuts. I'm sorry, not just rate cuts, but tax season, right? Tax cuts. We're going to start pricing in tax cuts, and that means consumer spending is going to pick up. The only thing about the economy right now, which is, why I wanted to kind of do this, because what risks are we looking at? Here's what I wanted to say about the economy when it comes to Kava and Lululemon is it's good to be early to keep your eye on it. But right now, a lot of the economic strength, we're going to jump to that. A lot of the economic strength is not coming from consumer spending, right? It's coming from, here we got retail sales today. It's coming from infrastructure build for AI. That's where all the strength's at. So, ironically, you do want to actually buy consumer discretionary on a weak consumer because it's usually pricing it in already. But you just want to keep in mind, look at retail sales where we're still good. The retail sales are still good, but I don't think we're at peak retail sales. I'm going to be more interested in Kava and Lululemon in October. What do we, August, September, October? Probably in October, because I think we're going to get a bigger correction in October. Usually that's seasonally where the mutual funds start to tax loss harvest. You guys remember this? For the last 2 years, we've been calling this out. You get tax loss harvesting with a whole bunch of other seasonal effects. And that's when you want to buy these Kava, Lululemons for a stronger year-end rally into the tax cuts and into, probably more likely rate cuts. So I think we're early on it. Starting a starter position, sure, but I think we're a little early on it. Okay. So yeah, let's go to the economics. Here's what's going on. Well, let's reset here. Sentiment, positioning, waiting for a positive surprise, breath. Yeah, let's go to this really quick before we hit this. We're going to be looking for a positive surprise in the market. We're going to be looking for that this month. So this month, right? So far we had non-farm payrolls were okay. The employment report was soft. The market, the economy is softening, but it's not a weak economy. A lot of people want rate cuts. We talked about this, Tanner. It seems like the Fed's a little political, right? It feels like it. I think Trump is making it political. I'm going to give my 2 cents here. I think he's making it political because he's a smart guy. He knows how to leverage his power. And he's saying, you need to cut, you need to cut, you need to cut. And if you don't cut and things go wrong, it's your fault. If you do cut, I look good. So he looks good either way. Trump is a smart sucker here. He's a smart sucker. He knows how to really market. I don't think Powell's being political at all. The 2 people dissented in his meeting. A lot of that is because they want to be the next Fed chairman. So you got to think about that too, right? You got to be objective and say, you know what? Of course they're going to dissent. All that means is we are going to get a rate cut. The market's going to price in the next 6 to 12 months of more rate cuts going forward. So you're going to get it. The market's excited about that. But I don't think it's political. I think Powell's doing the right thing. And after that PPI report, you can see why Powell's like, hey, we don't really need a cut right now. Hold on. Inflation is not getting destroyed. And, the economy is still strong. Retail sales were good. Where's year-over-year retail sales? I'd rather look at that. I guess it's not up there yet. Let's pull out the 3 stars. I don't like how they set this up. So retail sales, this is our best measurement. This is our best measurement for hard data. This is our hard data of the consumer. Our other hard data is going to be businesses. And this is why I say the consumer is slowing. If I can freaking find it, the consumer is slowing, but business, industrial business is climbing. Here we go. So if we look at the long-term trend of retail sales, okay, again, this is our strongest. This is one of our forward-looking GDP metrics. What do we see? Slow, but still strong, right? I think the historic average is somewhere around. Does this give us an average? Maybe this one doesn't give us an average. I don't think retail sales. I looked it up. It's like 3.5. So we're still good, but it's set to slow. So retail sales are slowing, which is a good setup for these cyclical stocks who are getting destroyed, because eventually they're going to get that's already priced in, and then they're going to start pricing in the upside, right? So I think we're a little early on that, which is good. So retail sales trend is whatever, right? It's Now check this out. This is where all the strength is: industrial production. This is our business activity. I think it just made another high, right? Right back to January high. So industrial productivity is high as hell, which is, what stock do I want to look at for this out of all in the market? What am I looking at right now? Check this out. Okay. And I'm jumping over here because this is how I find a bottom, or how I find something I really like. We've been watching this for a minute. It's called TeraWulf Technologies. What does it do? It is a renewable energy. It used to be a Bitcoin miner, and they shifted into data center support with these high performance GPUs, high performance computing. I don't know, something like that. But they use renewable nuclear. They're doing nuclear, hydro, maybe gas. Either way, they're generating electricity. We're waiting for these OCLOs, right? We're waiting for these to come back down. These mother effers haven't came down. These are explosive plays. I'm bullish on tech, AI, crypto, but I think nuclear stocks are going to freaking rip, because they receive revenues no matter what. There's not enough. You got to be long, power technology. Also, energy storage. Who's our other play? FLNC, right? Fluence Energy, right? This is another one. You want to be long these. So what I'm getting at here is, you see the industrial production strong as shit, So economic activity is picking up. Who's going to receive all this revenue from the strong industrial production, energy, no matter what? So Google is now paying Wolf Energy. I think Google has a 9% stake. This thing is exploding, by the way. It's kind of too late to chase it today. I don't like that, but it looks a lot like Iron. They do the same thing. The two competitors, Iron. I'm pissed I missed this. I was trying to leverage in way back here and I got pushed out a couple times. I should have seen this coming. But you know what? Whatever. I was focused on crypto. This thing is a monster. Why? Because the market cap is, price target is at 13, by the way. The market cap is 3 billion, 3.4 billion. If it pulls back, it's 3 billion. This is a small cap with that can do a 10x. This is one of the 10x opportunities because they're Bitcoin mining. I wouldn't even doubt if they put it as a treasury like MicroStrategy, like BMNR, and they keep providing energy for AI. Right. So I get hyped about this because I know how big this thing can move. Right. I know how massive this can move, and our industrial production is giving us that signal. So it is overbought at the moment, but these can really rip. So I wouldn't chase it. I just keep your eye on Wolf, TeraWolf, right? Keep your eye on TeraWolf. It's moving a lot like this. These are the two power, power generation technologies you want to look at. Iran looks like it's going to make another break higher. This is also at all-time highs. Is the RSI reset? Not yet. These things run. But Oklo is something I definitely have been waiting for it to get crushed. I'm hoping that VIX push to 20, right? This VIX push to 20 gives us an entry for Oklo, right? Maybe it comes down to where's our Oklo support. I know we're shifting gears here, but I just want to point out that consumer discretionary, I'm not as excited about consumer discretionary spending as I am energy, right? Energy power generation. That's more exciting because the margins are huge, the revenues are huge, and all the implications of the AI themes, even blockchain technology, robotics, everything has to come from energy. So I'm very bullish on energy, just not oil companies, right? So Oklo, I hope it comes back to the 60. That's probably where you're going to get a buy for me, is Oklo in the 60s as it get there. I don't know. Look at this RSI. That's what I want to wait for. I want to be looking for Oklo. I think this could be a $50 to $100 billion market cap. It's at 10 billion in the next 5 years, maybe 3 years, maybe 2, right? It's very volatile, high beta. But check that out. SMR2 is another one. This one might be in a better shape. Matter of fact, I like SMR. SMR is looking better. So keep your eye on these. Keep your eye on these more than anything. I want to do debit spreads with CRM and Lulu because they're big market caps, big prices. But when it comes to owning shares or more momentum, I mean, you might do call options on SMR too, but these things can run. These can move like cryptos, right? SMR, Oklo. All right, let's get back to business. Let's get back to the business. All right, so back to the economy here. Here's what everybody's worried about, right? Back to the economics, because the economics drive narrative right now. The macro drives the narrative. Here's our biggest issue right here. New York manufacturing. Oh, it's going up. Dude, industrials are strong as hell. Holy smokes. Imports were negative. Exports were pretty strong. Okay. Industrial production, capacity utilization, manufacturing up, consumer sentiment. Here it is. So consumer sentiment fell a little bit. That's nothing. The market's going to shake it off. VIX isn't even moving. Inflation 5-year target went up. It shot to 3.9, and that's not good. I mean, now we shift to the Fed. Is this going to keep the Fed from cutting the whole year? Are they going to hike rates? Hell no, they're not going to hike rates. But now people are going to put that, they're going to start pricing and positioning for a Fed hike, which you're stupid. They're not going to freaking hike, bro. They're going to hold, if anything. They're not going to hike. So these idiots positioning for a hike gives us the opportunity, right? Gives us the opportunity to wait for that positive surprise down the road, maybe the FOMC minutes. Okay. A positive surprise is going to get them to cover their long or cover their shorts or position right back into the economy or right back into the market. And that's going to be when that VIX 20 turns into a super buy the dip and you're positioned for that upside move. Maybe I'm talking too fast, too much here. I can try to make it simple, but we got a speech next Friday. Okay. And I think the real, what we're going to see is home prices falling. That's good. Here's the next catalyst, in my view. It's going to be the end of the month. You always get GDP, right? You get GDP. It's going to come in stronger than it was for the rest of the year. strong GDP, and then we're going to get pending home sales. Nobody cares. It's core PCE. This is what I'm looking for the next catalyst. The market's either going to price us in early or it's not. But core PCE is what matters. It's been moving higher over the past 3 months. And if we get a in line or lower than expectations, the market's going to shove off, because this is what the Fed's looking at. The market's going to shove off this PPI report and say, oh, that's irrelevant. That's a one-time thing. But don't get me wrong. The PPI spike is a real issue for the Fed and for sentiment. It's a real issue. Where are we at? PPI. Core PPI 0.9. Dang, that was a big move. Core PPI year over year. Here it is, 3.7. So yeah, that's a real issue right there. That's why Powell, okay, Tanner, if you're still here, this is why Powell's holding back, because we're not clear on inflation. And to be honest with you, the longer we wait, the better the bull market trend, right? There's nothing but upside from here. The question, because you have the consumer slowing, so I don't think inflation's a real threat, but it definitely is threatening sooner rate cuts, right? It's threatening sooner rate cuts unless employment really starts to roll over. But what are we seeing? We're seeing industrial production really pick up. ISM is still strong when it comes to services. So this is a weird market, and that's why I just want to go to the technicals, because I'm like, look, nobody can agree on where we're headed economically. It's hard to know that. So if we go to the technicals, what we do see is looking at our sentiment indicators. How many stocks are above the 50-day moving average? Is this our 50? This is our, there we go, market breadth. So how many stocks are above the 50-day moving average and their 200-day, right? We have a bounce here. This is all that matters. We've bounced since August 4th, right? Because price matters, right? You pay for price. You pay for price. So we need this to keep trending back up, or at least consolidate. If this starts to roll over, that's going to be a buy the dip, obviously, but we'll see in the next 14 days whether the market really believes that PPI is an issue. We'll see it here. How many stocks are trending? Market breadth is weakening. Okay. If we go to the how many stocks are above the 200, it's still climbing. So I don't even think the market cares too much about that PPI report. What up, Tanner? Or I don't think it matters too much about that PPI report. So I'm with you on that. I just don't think that it's political. I don't think Powell is saying we're gonna hurt him. You know, we're gonna hurt Trump by not cutting rates. He has to be responsible, right? He has to be responsible and let AI be the deflationary force. Also, the bond market is what really matters at the end of the day, right? We're going to go to that. The bond market rates are what matter for real estate, not necessarily the Fed. That's like a second derivative, but the first derivative is interest rates when it comes to the bond market, right? So now we're dipping a little bit into the macro, or back to the macro. This is what matters. So if you want these, like this is basically the anchor to mortgage rates. If you want mortgage rates coming down, or you think they need to get cut, then the bond market needs to see that inflation's coming down, or employment is weaker, and that's the bigger threat. So it doesn't. The bond market is saying, at least in the last 2 days, from what PPI to retail sales, the bond market saying this is a hot market. This is a strong market. There's no reason to buy bonds. If anything, we need to be buying equities that are going to benefit from the rise or the stickiness of inflation. This is macro summer. We're in macro summer where growth and inflation are both rising. We're in the early stages, but growth and inflation are rising. This is very good. This is probably the strongest, longest period we're going to get. The only downside is those high cyclical, high beta stocks that need a rate cut may not perform, right? They may not perform in a macro summer. So who does perform? Stuff like UNH, right? Defensive growth, ELF. ELF is defensive growth. Hey, I like ELF. We're not ready yet, but I like ELF. Who else is going to perform here? I like Tesla. Capital intensive. Tesla does need rate cuts, but Tesla has a whole different narrative, right? Tesla has a completely different narrative. Maybe that's not what we should be looking at here. But defensive growth, who does good in inflation? Industrials. So Caterpillar. Caterpillar is one of those. John Deere. That thing gapped down, right? So we'll see. We just got to look at the market. I mean, banks are going to be doing good. but the market is rotating into healthcare. You know who's going to do good no matter what? Energy producers. So CEG, this is another one. Now we're kind of all over the place. My point is the market's trying to find its footing. It's trying to figure out where we are. We need more data. So I wait for the VIX to spike. We need clarity. We don't have a clear roadmap right now. But what we do know, if we go to the move index, is that there is no instability in the market. This is not going to be a giant correction. The bull market is on. This thing is falling. There is no rate risk. The rate risk is not there, as in people want to own bonds. They want to own bonds. And that's healthy for the market. I think bonds and stocks and risk assets also actually rise together, right? There is no risk from from the oil market, from energy market. We're not going to get a real inflationary spike. The dollar is deflating. Why? Because I mean, they're increasing liquidity into the market. M2 is exploding. So this is a strong bull market. But guess what? We're probably going to get a correction here in the next couple weeks. At some point, you want to buy the dip at 20. You want to buy that market. You want to buy that. So breadth is actually expanding here. This is wild. Breadth is actually expanding, and that tells me that we're just in stall speed, meaning we're still climbing, but the opportunity for correction is around the corner, right? One bad negative surprise, right? Another negative surprise, the VIX is going to spike, and then we get to buy the dip. But don't get negative on the market, right? Don't get negative on the market. This is high beta versus low beta or defensives. Are we going to switch into defensives? Probably not. Right now, all the strength is in industrials, or it's in the business activity of the market. It's not in the consumer spending, right? But that's tricky. That's tricky. So that's probably too much information. Very informal. I'm just going through my ideas, how I think about the market when I look at the technicals. A lot easier to read charts than to try to guess what's happening next. We just got to prepare that there's going to be a surprise. And where's that surprise come from? We have housing. That's what it was. ITB also moving up. So this is a nice little squeeze here from the home builders. Let's go to the weekly, 47 minutes. Weekly chart. Home builders moving up. This is another play. If there's no rate cuts, does it keep moving up? I don't know. Because this was the rate cut play. This is one of the rate cut plays, is home builders, right? So do they still make money? They might. I don't have a definitive, answer on that. I don't have a definitive answer on that, but I will go to this. I will say we went through positioning and sentiment. Oh, positioning. Yeah, that was the other part. Check this out. So I want to make sure that we understand this part. You guys want to hear this. You definitely want to see this. This is market positioning. Okay. This is market position. At the moment, this is why I'm cautious that we're going to get a pullback. There's a lot of leverage in the market. We have two measurements here of FINRA margin debt. This is when you're like, hey, Robinhood, let me borrow extra cash to get leverage into markets, right? When it comes to the purple line is overall margin balances over time. It's making all-time highs, right? This came out a couple of weeks ago. It's breaking all-time highs, meaning we're nearing a top. We're in the phase. This is why it's macro summer. We're in the phase where the top is coming. And I'm not saying weeks, it could be months away, it could be 6 months away, but we're in the phase where investor sentiment is so bullish via margin debt rate, margin debt. This is for retail investors. This is not necessarily, fund managers yet, but we're in the phase where you need to keep an eye on this because people are very leveraged. There could be a very sharp pullback. I don't want to say now, but if the inflation narrative picks up, this is going to get ripped. We're going to have a big correction, 5%, if that continues. Let me see. But we're not at all-time high, so let's take off the purple. But if you go back to 2008 and 2001, there was still way more margin per dollar into the market. All right. Number two, liquidity is rolling over at the moment. Why is it rolling over? This is liquidity momentum. We're in a low liquidity phase of the market, and with no rate cut, that lowers liquidity. So I think corrections around the corner. Just looking at these metrics. What's our other one that I wanted to see? Oh, positioning. Where's our positioning at? Where's our market positioning? Let's go back one. Here we go. The put to call ratio. Okay, this is going to be more positioning and sentiment, whatever, same thing. it spiked, so we can still grind higher. When this gets to the lows, if we have the VIX at 15 and we have, the put to call ratio max calls, then I'd be ready for a correction. So we're not there yet. We have one variable. We have the VIX at 15, but we don't have put to calls at the lows, right? So if we get down here with the 15 VIX, then the probability of probability correction goes up. Here's the fund manager, active fund managers, when it comes to how positioned they are in the market. They got to near 100% and then they let off on Wednesday. So what does that tell me is we're still near where everybody's very leveraged into markets, but we're not at an extreme point. If this was at 100, right, 103, and the VIX is at 15, and the put to call ratio is at max calls, I'm definitely waiting for a correction. So we're getting very close, right, to correction territory, bearish divergence. Where is it? I don't know. We can melt up, but I wouldn't put a lot of probability on, I wouldn't take any big positions if you're trading. I wouldn't do that. I just wouldn't do that. I'd be patient because you want to buy that dip. It's a lot easier, and they're going to rush in for that dip, right? Economically, like I said, the growth drivers that I look at, the economy's strong. And so I don't even think we need a real rate cut, to be honest with you. I don't think we need it. I know real estate's hurting for it, but if you're not in real estate, you're like, what? We don't need no rate cut. So you can see that we've already started to reaccelerate in the economic cycle. This is new orders, production, and sales, right, for the business activity part. So we are picking up. When it comes to, what's the other thing we're looking at? Oh, financial. Here we go. Here's liquidity. So this is our liquidity. This is very important. This is what gives us the price. So margin balance is up. So liquidity is up. Treasury, TGA. We want the TGA falling. The TGA is rising. So what they're doing is they are sucking liquidity out of markets. This is the negative liquidity effect. We want this to be dumping. That gives us a big push. Look from May all the way through June. That was a huge recovery for markets because liquidity was positive, right? This is basically, so I know this is part of my course, by the way. You want to take a macro course and understand this to a better degree. That is in the description. Actually, it might not be there. I'm going to add it on there. That's the course you need to take, right? That's the course you need to take. Treasury, if you want a discount, hit me up. I'll give you a 50% discount. So Treasury general account liquidity is not negative. It's taking away momentum, right? So another setup. Global M2, this is lagged though, is up. So overall liquidity is up, money supply. Fed deposit, what is this? Excess reserves from the Fed. This is rising. This means that this is neutral. This isn't really spiking. It's pretty neutral. Financial conditions are easing, but this is also lagging. We're in June, so they're easing. So overall, what I see here is liquidity is still strong, but not right now. Not in the next 14 to 30 days. But liquidity will pick up again, and then that's when you want to buy. That's where the dip comes. So I'm setting you up for this short term. Wait for the correction. Be patient. Don't chase. And then boom, we're gonna turn back up. That's what I see. That's what I see. What else we got here? Yeah, let's get back to the charts. We're heading into overtime here for the market. Meaning, I'm just kidding. I'm almost done. I didn't want to go past an hour here. Everyone should go. Oh, appreciate it, Tanner. Thank you. I hope they love the class. Yeah, beginner investing. This is a little more advanced stuff that we're talking about today, but I think everybody here could enjoy it. Now, when it comes to, Bitcoin still is, on a liquidity lag here. Actually, my bad. I didn't want to go to Bitcoin. We'll do a different video for that. What I wanted to go to is what I have in play right now. So here are the plays that I'm looking at, right? Here's where I want to buy the dip. Here's where I want to buy the dip. I'm going to go through these relatively quickly. So pay attention. There's a lot of good plays. This is, Lemonade Insurance. Let me throw the tickers back up there. All right, so we have Lemonade Insurance. Guess what? This is a super strong stock in macro summer, right? What is macro summer? Go take the course. Macro summer is when growth and inflation are rising. Guess what? Insurance doesn't come down. Insurance continues to rise. Their revenues go up. Their margins go up. They're going to do well, right? They don't need rate cuts. They do not need rate cuts. Their business is mostly software and their AI. So this has all the features of a doubling, right? This is all the features of a thematic macro trend. This is what you want. So we have lemonade there, right? We're not going to do full technicals. I just want to show you. Xometry, digital manufacturing. Well, guess what? Consumer spending might not, matter of fact, this thing is stronger than I thought. Consumer spending might not be picking up, but guess what? This is about industrial manufacturing. This is AI, digital manufacturing, custom parts. We talked about this, and we've been long this stock for a while, very bullish on it at least, and they had a good earnings report. So as the manufacturing ISM picks up, it's in recession territory, but that is soft sentiment. The hard data, industrial production, manufacturing, that is picking up. All this spend, right? All this AI infrastructure spend is going to leak into the manufacturing sector. It's coming. So this Xometry is the leader, by the way, in digital manufacturing. You can think of it like Amazon, not AWS, but Amazon Marketplace for manufacturing parts. They are by far the fastest way to find a part and get it built custom. And this is all over. This is not US based. This is everywhere, right? So very bullish on Xometry. And it's also technically about to break out. I might even get a leap call here after this after this freaking stream, because this thing is very strong. And guess what? Our it doesn't need a rate cut. It kind of does. I mean, I'm not gonna lie, rate cuts will help it, but it's a small cap stock and the manufacturing cycle is picking up 2.4 billion. CRM, this is a buy the dip, right? You can see they had an upgrade today. Davidson's upgrade Salesforce to neutral. Pricing growth. Now they compete with Microsoft and blah blah blah, but guess what? There's going to be so much opportunity, total addressable market for AI agents. CRM doesn't compete with it doesn't directly look. So if yes, they compete with Microsoft, but the CRM software is going into all businesses, not all businesses, but most businesses. So if you're competing against Microsoft, you don't want their software, because you're literally paying your competitor. You want a neutral source, which is going to be CRM, right? That's the easiest way for me to explain it is, CRM is going to go higher. So I got leap calls on this actually to 2027. I think it breaks all-time highs in the next 18 months. That's an easy call for me. They're still a leader in the space. So I like CRM. Next, let's go to Lululemon. We already talked about Lululemon. Oversold. Consumer cycle's coming, right? Oversold. It's in a downtrend, but I think it can recover. Maybe it's a short-term play and it turns, consolidates and then goes higher. So I like Lululemon. Probably the next stop, if it does bounce here, we're looking at 270. And then it might look like ELF. It looks a lot like ELF. It just consolidates. UNH already on fire. That's all over the internet. You can probably see it. UNH looks strong as hell. So this is another pick. At this point, you still have a lot of room for RSI to pick up. I think it's going to stay bullish all the way to 350. It might not care about, the market correction as much. Wolf starting to take off. Energy, power generation, renewable energies. You got nuclear, you got hydro, you got nuclear hydro, you have energy storage. What else powers this? The nuclear attachment is what makes it so juicy. You got ENPH, possible short squeeze. I got some debit spreads out till 2027, I believe. So this thing's getting destroyed. This is probably one of the worst, performers in the market. And I think it can squeeze. This one's very risky though. Be careful. Chainlink. This is, I'm more bullish on this over the long run than any other stock or crypto in the market. I will be releasing a video over the next couple days on Chainlink so that you understand the narrative. Trust me, this is the biggest opportunity I've ever seen, not just for a trade, but you want to play this for the next 5 years, right? This is the internet. This is the new internet. Nobody sees it yet. It's coming. I get too excited about it. It's coming. This is the new internet. Do your research on Chainlink. Trust me, it's at a 14 billion market cap. This is going to be at a 500 billion market cap over the next 5 years. It could possibly be at 1 trillion over the next 10, maybe sooner than that, depending on how fast blockchain technology accelerates. And this is core infrastructure. Once Trump leaves, that's where we might have an issue if somebody comes in and they're anti-crypto, right? But by then, this will be already embedded in the bloodstream of the financial system. So I think it's a winner no matter what, right? Tesla, be patient. Tesla, you got to be patient. This is a strong wedge pattern for Tesla that's forming. I know there's a lot of negative news. It's, I'm watching Tesla. Look at that uptrend. All right, Tempest AI. This is oncology. You're using AI to generate outcomes or solutions to solve disease, right? This is a big winner. It's technically starting to break out of this trend. I do want to see a pullback. We bought this in the $1,000 portfolio the other day. Look how strong this is from 50. I wanted to own it at 50. I missed it. It's up 40% already. This is a $100 billion market cap in 5 to 10 years if they continue, right? Let's not talk too far. Let's just say this. It's at 13 billion. This will be a large cap stock, maybe around 25 billion in the next 6 months. It could be that big in the next 6 to 12 months. Let's go 12 months, right? Okay, nano nuclear. This one's, I've been waiting for this. I think when this moves, it's going to move. It's going to explode, but I'm being patient. I don't want to chase this. This is a nuclear stock. We got Coinbase. This is a crypto stock. Coinbase looks great position on a technical basis. Pulling back, almost fully reset. You want to watch the technicals on this one. All right. So Coinbase looks great. I think Coinbase and MicroStrategy are two where a lot of people are getting hurt because they're like, hey, why isn't it going higher? I'm telling you right now, MicroStrategy is not over yet. It just sucks for a long time. And then it takes like 30 days for it to jump like 100, 200, 300%. So I would keep your eye on this. I'm very positioned in this too. This is not, financial advice to anybody. Very, very high volatility. But when everybody gets scared, we're still above anchored VWAP. This is, Bitcoin's going to make new highs pretty soon here. Maybe not till September 1st, maybe next week. We don't know. Either way, MicroStrategy has a net asset value that will double Bitcoin. Well, I don't want to say that. MicroStrategy will outperform Bitcoin when Bitcoin gets its volatility. When it squeezes the shorts, you want to be long. I had Qualcomm for a while, and then I was like, maybe not. Forget Qualcomm. BMNR is giving you an opportunity. This is leveraged Ethereum, right? This is leveraged Ethereum. Ethereum is the hottest play on Wall Street right now. And, this thing ran up quickly. I thought it would have a pullback because they just diluted. Let's look at the market cap. Market cap is... All right, let's see. Did they dilute bad? How bad did they dilute? I don't even know if they diluted yet. What is our market cap? 9 billion. It's at 10 billion. So they are diluting. We were at 7 billion at the highs. Now we've pulled back and now we're at 10 billion. So they're diluting right now. That's okay because they're buying more ETH. So as soon as Ethereum picks up, I was waiting for this. Once ETH picks up, BMNR is going to take its second leg. It's headed for 100. So just keep your eye on Ethereum. This is really where it's at. And this narrative is very strong. What do you need? I mean, the rate cuts the hot PPI really hurt investor sentiment. Okay. But as soon as we get something in the news, I'm going to finish with this. As soon as we get something in the news that says, oh, investor, oh, never mind, that was a one-time thing. Or, one of the Fed governors is like, oh yeah, we're going to look through PPI. That was a short-term thing. It's game over. It's game over. So we're going to end with this. We need a positive economic surprise or positive sentiment from one of the Fed members or from the economy. I think it's going to be GDP at the end of the month. PCE, inflation. We'll see how things play out. I'm done. Go subscribe if you haven't already to my YouTube. Follow me on Twitter. Let me know if you liked it. Give me a comment. Also, like I said, there's a macro course. I have a beginner's technical analysis course too. If you have no clue how it works, that one's a little cheaper. Just go check them out. Go through my profiles. And you'll make way more back. You're going to make more money back than what you spend on it. Okay. If not, then we'll give you your money back. We'll see how that plays out. Either way, check this out. I just want to be clear here. This is the strongest bull market setup of all time. The Fed is still cutting. Donald Trump is bullish, the most bullish president of all time. The White House is bullish on crypto. The White House is cutting regulation like mad. You have AI, energy storage, energy power generation, robotics. You have so many things down the pipeline. Space exploration. Talk about Rocket Labs. You have too many things for this market to be bullish. You need to be bullish. This is not financial advice, but I am warning you. Follow me on YouTube. Go to my profile where it says portfolio construction. I start with $1,000 and I'm adding 500 whenever I see market opportunity, right? I'm going to manage that portfolio. And just for you who are beginners, so you can kind of see how somebody might do that, right? I am not an advisor. I'm not saying copy me at all. I'm saying understand, just get a look for it. So you understand, oh, okay, that's how somebody might do it, right? Number two, follow me on Twitter. There's a lot more tweets on there. Number three, Just wait for that Chainlink video. It's coming out. Best, you know, this is the biggest opportunity I've ever seen with Chainlink. Some of you knew we were early as hell. Now everybody's on it. It's coming. This is the next biggest thing in crypto. It's not Bitcoin. It's not Ethereum. It's going to be Chain, and it's sure in the hell ain't XRP. Catch you guys next time. Stay blessed, eat healthy, stay positive. Always remember to love yourself and help people out around you, right? All this money means nothing. Means nothing without the glory of God. It means nothing without giving praise and honor to why we're here. So you guys stay blessed again. Eat healthy, stay strong, improve every day. We'll catch you on the next video. Thank you.
Ich fick dich, Alter.
Ja, komm doch. Olleg.